Well, I'm back from Cancun, and it's nice to be back home. Actually, it is really nice, and I don't know. Do you know what? It was a nice holiday. 2 weeks there was too much. I don't know why. The thing is, I love what I do for a living. You know, I genuinely do love stocks and shares. I'm passionate about it. So most people, holiday and take a holiday away from their work. I miss my work. I really do. That's why I keep up and do videos and stuff because I love it. And I've always said this. I had 25 jobs before I was age 25. Couldn't find anything I liked. And then I fell into sort of radio. Well, I didn't fall into it. I tried hard to get into it. But I always loved stocks and shares at the time, but I didn't have enough money to invest. So when I started working in radio, I started investing, and then in the end I combined both by doing podcasts on investing, and I do videos on investing, and I love it. And there's a famous saying, is it? Love what you do for a living, and you'll never work again a day in your life. And that's something I believe about, So so for me, a holiday, it's nice, it's a nice change, but a holiday from what? I love what I do. I love it. Okay, in this video, I'll be talking about one company bit of news, an update on a company I think people have missed. Significance of something here, okay? The sustainability, a few questions. By the way, I'll change the format a little bit. I'm going to include some questions from people in the comments below and answer them because I think they're good questions and some people would like me to share them. So, the question is the sustainability of the iUKD dividend fund, which is I hold 50% of my money in that fund. And is the dividend sustainable? It's about 7%. I'll go into that. Someone's asked me to cover the MACD, which is moving average convergence and divergence. It's an indicator on the chart. Okay, look at that. Don't forget charts. Any indicators. It's a tool. It's one tool. And I think the most important tools are fundamental analysis all the time, and technical analysis, charting. It comes in there to help you look at when to buy. But I think fundamental is what to buy. Technical analysis is when, like anything. If you're a plumber, you don't just use one tool. Use many different tools. If you're a surgeon, you don't just use one tool. You've got lots of different things. So I think that about charting as well. Just one tool. Nothing is a be-all and end-all. Also, I look at the charts, the companies I hold. By the way, a couple of interesting moves this week. Bidstack especially, the chart of that. And coming up, I'll be telling you a little bit of news about Bidstack. Right? I don't know if you know this. If you're connected with James, you may know this, but I find it quite interesting. Also, I look at my stock performance, my personal performance, and don't forget, subscribe if you like this video and hit that bell button. You only see the bell after you hit subscribe. But that means when you hit the bell, you get notified whenever I release a video. Okay, it'll be sent by an email to your inbox. You never miss that video. Also, comment below if you ask a question that I think is relevant for a larger audience. I'll check it on the video here, okay? And I'll try and address it. And also, don't forget, right below here, the video on YouTube, there's a little show more. And you click that, it expands the menu, and it's got loads of links below. Every stock I talk about in this video, I've covered more in depth on previous videos. So check that out. I put a lot of work and effort into it. So get down below there, check it out, and have a look at my previous videos, okay? All right. So the first bit of news, it's not really big news, but I thought I'd cover it because I talked about, skin in the game being one of my quality filters when I'm looking at stocks and shares. If a CEO is an owner, I like it. They have skin in the game. If a CEO is just a manager, a high-paying manager with no skin in the game, then I try and avoid. And like I said, of the stocks I hold, only 2, I think 11 stocks I hold now, only 2 of those companies, okay, have CEOs which don't have major skin in the game. By that I mean 3% or more, okay, of the entire issued share capital. And they are, at the moment, my worst performing stocks. Coincidence? No, I genuinely, it's a difference between, in fact, my mother came around yesterday. And my mother, they went up to North Wales and they wanted to get a haircut quickly. So they went to the shop, and they did have an appointment. And my father said, can you get my mother's hair, do some blow dry my mother's hair? And there's 2 in there. So, well, we have an appointment at 11. It was 9 o'clock in the morning. I said, couldn't fit her in. I said, well, you got 2 hours, only a blow dry, And they went to another shop and the owner was there. It wasn't managers, owner was there. And she said, I've got an appointment at 10. Come on, I'll fit you in straight away. Of course, it's her business. She wants to earn more money. She wants to do deals. That's the difference between an owner and a manager. A manager, they can't be bothered really. They can get paid at the end of the week. An owner, they have to earn the money. It's down to them. That's it. They have to earn the money. So anyway, it was Powerhouse Energy, all right? So there we are. There's the information there from Vox Markets. Let me just swipe that. They just did it. Vox Markets there, 7.5 million market cap. And what we saw was the non-executive chairman, Dr. Cameron Davis, acquiring 1.2 million shares. Sounds a lot, but it's a price at 0.41 pence. So it equates to £5,000. Now, is that significant? Is it? I understand for a private investor, that's a chunk of change that right there. £5,000 is a decent chunk of change. But for a non-exec chairman of a listed company buying £5,000, is that significant? I don't think it is. I mean, that's his first purchase, I think, of the company. And I'm thinking, what's he trying to say by doing this? Because in my mind, if he's trying to say, I think I can make some money here because this is a good business, then even if the company 10 bags, he'd made 50 grand. Okay, it's again a decent chunk, but it's hardly game changing for him, is it? It's hardly a life changing amount. So am I being cynical? By all means, comment below. Am I being cynical, thinking he's done this to try and raise awareness, or do you think it's a genuine buy? Is it a genuine buy? What are you thinking of this? I mean, let me know. Is it a genuine buy, or is it just a case of, oh, look, everyone, I'm buying shares in the company. I think you should too. You should too. Because I think, if he'd put 50 grand in, I'd have been impressed. And I don't think that's a stretch for non-executive chairman of a listed company, 50 grand. Or even anything above 20 grand. But £5,000, is that... He's trying to pull the wool over your eyes a little bit if he tries to, what's the word? So convince you in some way that you should put money in too. What do you think? A genuine buy? That's what I'm trying to think. Comment below, genuine or not, on that Powerhouse Energy. And listen, I'm not. No one wants to throw away £5,000. But if the guy's been paid 40 grand or 50 grand to be a non-exec, that is, I don't know. And he also is on other things. He's doing other things as well. I don't think that's a big chunk. I want to move on to, and this is so related, because last video I did was on Polarean, and they did a fundraise of 2.1 million, all right, 2.1 million pounds, and Richard, the CEO, put in 80 grand. Now, he earns about £210,000 a year, all right? That's still about 30% of his annual wage, which is, I think, is a big amount. Do you imagine if you're earning, 30 grand a year, you put 10 grand into one company? That's and that's not. I mean, he owns 4 times that, 5 times that. So I think that was a conviction buy. But it's worth looking at this, right? The group, good placing, only 10% discount on a very illiquid stock. Not many people know about it. Strong demand from institutional investors. Now, this is worth looking at. Clinical trials, it's going to help clinical trials, ensuring timely completion of patient enrolment, which is expected by the end of Q3 2019. So we're in Q3 right now. Yeah. Finally, the placing will strengthen the board's balance sheet ahead of crucial period in Polarean's development, during which the directors expect to announce a readout of the clinical trials. And if the trials are successful, prepare to submit a new drug application to the US Food and Drug Administration. Now, like I said, there's the placing, there's the details there. Richard Halligan took, took about 80 grand's worth. He now has just £500,000 worth of stock. In addition, Amati Global Investors subscribe for 11% of the stock. And now we've gone to, already they have about 91%, I think, and 60. There's 2 different types of lungs they're testing here for the phase 3. This is the most low risk phase 3 I've ever seen. All right, clinical phase 3 are normally very high risk still, 50-50 chance. Their tech improves MRI scans by 100,000 times. They're going up against, right, basically a 40-year-old technology. They have 25 million, Polarean have 25 machines already in use, in clinical use, research use at hospitals. They know it's better than this old bit of tech. The old bit of tech can only create 2D images, okay, and it's also radioactive. It's not even healthy for humans. So they're going up against this. Theirs is not radioactive, and it creates 3D coloured images. To me, it's a no-brainer. All I have to prove is non-inferiority. That means their results have to be better than this 40-year-old tech. We know that is the case already. Just go through some of my previous videos. Look below. It's going to, in my mind, unless I'm speaking outside of my neck, they're going to fly through phase 3 quite easy. Look at here, here's a timeline. So there we are. They've done them. They're going to complete this clinical phase 3 this quarter. Okay, and then they're going for a new drug application and write-up submission, 46 months, approval next year. All right? This is very significant. FDA approval is very significant, and I think it's just a matter of time before these guys get it done. All they have to do is get the patients enrolled, all of them get them tested, get the readout, and then they go for the FDA approval. This is what happened to Shield Therapeutics on Friday as they announced the FDA approval. And the market cap of this company is a lot bigger. Look at it. It's 205 million. It went up by 70%. This is on FDA approval. Why do you think Richard has put another 80 grand in? Why do you think Amati Global, who's a holder already, has chucked in more money in just before the trials come out? They've done the majority of trials have been done. They've enrolled all these people. Why do you think that's happening? You've got a question. Would Richard put 80 grand of his own money in unless he was superbly confident of a positive outcome on phase 3? These, like I said, their tech has been running in 25 hospitals already. You can just look up the research on the comparisons between the old tech that can be compared to in the phase 3 and their tech. It's incomparable, really. There's just flying colours above the old tech, and it's also not harmful to humans. So I just think people have missed the significance of this. I genuinely think this phase 3 is a formality. It will pass that, they'll go to FDA. What are the FDA going to say? Oh, hang on. So your tech produces better images. It's 3D images. It's also better readouts on many different data points. And it's not harmful to humans. Oh, I wonder if that's better than the current tech, which is harmful to humans and can only produce 2D technology images. Yeah, I wonder. It's a no-brainer, isn't it? Absolute no-brainer. So, I think this will fly. It may take half a year to get to next year, in the second part of next year. So we're going to talk about this time next year, the FDA approval. But now is the time, I think, to start accumulating if you've done your research and you believe this, phase 3 is a walk in the park. Okay? Okay. Question from a viewer there. He said, I've owned iUKD in the past. My concern would be whether many of the portfolio company dividends are sustainable. A lot of house builders in there are, and VOD, case in point, Vodafone. So what iUKD is about, I've talked about it before. Look below. It's an income-producing fund, ETF, it is, which is an exchange-traded fund. You can look at it on the chart. You can buy it like a share. You get live quotes. You do everything like you'd buy a share. But what it does, it's BlackRock owned. iShares are BlackRock, the biggest investment house in the world. They invest directly into 50 of the highest yielding dividend paying stocks in the FTSE 350. So it's FTSE 100, FTSE 250, 350, okay? Now, at the moment, the yield is about just less than 7% because the share price has gone up. So obviously the share price goes up, the yield comes down. Is it sustainable? And now, when you're talking about individual companies, maybe not with dividend yields this high. There's a problem sometimes the share price is sunk on fundamentals, okay? But they're still having to pay out a big chunk of dividends. So normally they have to cut the dividend to sustain it. I don't think this is the case with this because when you think of it, they're spread over 50 stocks. So if 1 or 2 or 3 or 4 companies cut the dividend, doesn't really matter. Each company only has a 2% exposure to this fund. So if a few of them cut, it doesn't matter. All they do is replace that company with another high-yielding company, So I don't think, even if 5 or 6 cut the dividends, I don't think they have a material impact. Because as I said, each company is only taking up 2% of the fund, on average. So it's a case of swap in, swap out. So I think it is sustainable, but it's not on an individual company basis. If you're looking at just individual companies and looking at high yields alone, without looking at the rest of the fundamentals, that's a risky play. That's why I went with this, because I think it's the least amount of risk if you want an income-based, sort of equity. Because at the moment, my small cap stocks I invest in, they're all for capital upside. This one is income related, so I get 7% a year pretty much. And in future forecasts, I'm looking at a total return of 5% a year. And I reinvest those dividends to buy more from this fund. So that's why I believe it is sustainable. Okay, next question. Can you mention how to use MACD indicator, please? I've got to stress, like I said, it's moving average convergence, divergence. On the bottom of the chart, we'll look at it in a minute. But it's one tool in many. I believe fundamental analysis and research is a lot more important than charts. Fundamental, news will break a chart setup every day of the week if it isn't expected. A chart only shows you what's there fundamentally, essentially, what's been based in. I always laugh at people doing charts on oil and gas stocks that are drilling or exploring for oil and gas, because you can't chart those. If they're drilling for oil and gas and it comes up a duster, the chart will collapse. Regardless of where the moving averages are, regardless of where the support is and all that stuff. Regardless of where you put your Fibonacci's, it doesn't matter. It'll collapse. It's an unforeseen bit of news. Fundamental analysis is strong. So, MACD, what's it all about? It's a moving average conversion average. It's a trend following momentum indicator. I like that because momentum is good with small cap stocks. All right, when they're news based, momentum is all there is pretty much. And I say hype plus hope plus potential equals momentum. That shows the relationship between two moving averages of a security's price, a security or share price. Let's look at this quick chart here. So the MACD is calculated by subtracting. This is a technical bit. I'll just show you the simple bit. This is a technical bit behind it. Subtracting the 26-day exponential moving average, the EMA, from the 12-day moving average. All right. The result is the calculation of the MACD line. So at the bottom of that chart there, you can see red and blue line. Can you see it right at the bottom there? The MACD, you can see by the signal line. And this, basically, that's the signal line there. And you'll see there a 9-day exponential moving average. I couldn't think of the word then. Exponential moving average is called the signal line. This is then plotted on top of the MACD line, which can function as a trigger for buy and sell signals. All right. So first of all, the blue one is the subtraction one, and the signal line is the 9-day. So here we go. Look at this. How do you use this? So it's seen as bullish. Let me move my face out the way here, sorry. It's seen as a positive value whenever the 12-day moving average blue is above the 26-day blue in red, and negative line is when the 12-day is below the 26-day. So, in short, essentially, there's three ways of looking at this. First of all, when it crosses a zero, okay, in the middle, either down, that's negative, or up, that's positive, or when they converge or diverge. I'll look at these in the charts. I'll give you some real-life examples of these. But there's three things to look at. Crossing that zero line, or when those two lines converge or diverge, all right? So let's have a look at some of these on the charts. Chart number one. Chart number one, Agronomics, of course, the investment company into clean meat. There's a lot of controversy around this company. Whenever I sort of share anything about clean meat on Twitter, I get people whinging about it. I don't understand what... Listen, regardless of what you think, it's not... People say, oh, I wouldn't taste that gloop. Some guy, I wouldn't taste that gloop. What are you talking about? I mean, do some research, please. It's not about that. This is a meta theme, okay? It's a mega trend. It's happening. We cannot sustain a population of 10 billion eating as much meat as we do now. Just look into the figures. The amount of water that livestock is like 1,700 gallons for a quarter pounder of water. We can't sustain that with 10 million population. The amount of agricultural land, it's like 80% of agricultural land is given over to livestock, right? But they only produce 17 or 18% of the calories we consume and 30% of the protein. It's just not efficient. Also, gas emissions and greenhouse gas. This by about 15% of greenhouse gas emissions come from livestock. And that will grow as population grows and wants to eat more meat. We can't sustain it. It is not sustainable. It has to change. Do you understand that? That's why I'm into this. It's not about arguing whether, oh, it's nice at tasting or anything. Oh, I wouldn't, it's not really meat. It's not about that, you simple fool. It's about where the money's going. Look at Beyond Meat. Just follow the money. That's where these themes are going. That's why I'm investing in it. But there's also other issues like environment, health. We eat too much meat in the Western world for our health. We need to cut down by about half our consumption of meat. Not only for the environment, for health as well. And also ethically. Does any animal want to have its throat slit? Does any animal want that? No. Most animals that we eat have feelings. They do not like pain. They do not want to be killed. They want life. They have consciousness. So it's all these things, okay? You may be namby-pamby on the ethical thing, like, I don't care about killing animals. Okay, fair enough. I do, but I'm also concerned about the environment. And so to sustain the population growth we have, this is going to happen. There's not just people just making this up. If you look at, in 2030 or 2050, 60% of the meat we consume will not be the meat we consume like it is today, like livestock. It'll be the lab-based, or it'll be replacement meat in some way. Just follow the money. Anyway, look at the chart here. So look at the MACDs here, because there's not a lot happening here. But you can see the MACD at the top here. This is convergence, all right? So this is a zero line. So this is sort of convergence. There we are. Big convergence here. This is divergence. When this divergence happens, look, it comes in. I genuinely like the RSI more than the MACD. I think it reacts a lot quicker than the MACD. Okay, we're going the other way. So not a lot happening there. Seems to be some support, decent support. It's 8.15. Bidstack. This is an interesting chart. I like this, and I'll show you why. Let me just move my face down here. It's getting really. Look at this. Green light. It's getting the green light. It's above 50. Again, look at the amount of times it's gone above 50 on this chart. Or below, I should say. Not a lot. Momentum is massive on this stock. Okay, and whenever it's dipped below 50 and come back up, it's had a good old run. By the way, here's the gossip. I contacted James. He's hoping to come on the podcast. He only said he'd come on the podcast when there's some meaty news coming out. So not this week coming up. Because, and I thought, oh, really? Because he's in China with the UKIE. I asked if he could share that. He said, yes. Check out who the UKIE is. Basically, going over there with delegate people with China. China is a huge gaming market. Massive, of course, one of the biggest in the world. But he's going to China for a week, so that's very interesting there. And he's coming back, and hopefully the week after, we'll be doing a podcast. Hopefully. I don't want to say it's going to happen then, there's going to be news then. Hopefully it could be the week after. You never know. News always seems to get delayed a little bit, doesn't it? But I remember once putting milestones on. 6 companies had milestones for Q2, I think, of last year, or Q1. Not one of them delivered on time. So these timelines can slip, but it's looking good. But I love the fact that he's going to China with the UKIE. Check that out, delegation. So they've got meetings set up there, I hope. But look at this. So look at the MACD. It converged here, okay, and you see this is where here pretty much. And you see, that's when it started toppling over, rolling over, started coming down, you see, and the price started weakening. But also, if you look, the RSI started coming down a lot faster. RSI started coming down a lot faster. Where this converged, it's on a little top of. So you look at both of these, and this is the momentum of the stock. But look at here, look. It's starting to converge again. Now, whenever it converges, and also the RSI is up again, look, above going towards 60, the party starts after 60, mind, after the amber. Whenever it converges, look, it's not only good news, okay? So you see there, it diverges there, but it converges there. So it's converging there, it's looking like it's very good news. So momentum is picking up in bids, I like that a lot. Next one we're looking at, bids, Immotion, anything happening here? Let's look at the RSI on this as well. So again, you can see that converging here. When it first converged and then diverged on the upside, it was good. It converged here and diverged again on the upside, very good, good. And then converged again. See, now that's weakness rolled over. It's coming back down. Now you've got to wait until that converges. But also there's an uptick here. It oversold and bounced up. Look. So it looks like it's good support here on what? Yeah, okay, there's a line here. So where's it above? It's above that now. I don't put that line there actually. I think it's good support there. So that's on 730. But again, it's coming down. In fact, it's gone below zero there. So when it goes below zero as well, you tend to see a bigger drop. Like I said, there's convergence, there's divergence, and there's a cross of the zero line. Okay, those are 3 signals you look at when MACD pretty much. Okay, next one is skin. It's Integumen. It's been a bit of a sell-off skin, isn't it? Look at the MACD again here. Look, rolled over, converged, diverged down, weakness. Didn't pick back up, you see, until, again, RSI popped above 50. This converged, then diverged, picked up again, nearly converged here, crossed over, I mean, and then went up, and look, Again, look at the MACD, look at the RSI started coming down, weaker, higher lows, and then this converged. Look, we've seen weakness in the price. We're waiting for this as well to cross over again, but it's down below. It's cooled off. Look, that's why I put the blue line in here. It's cooled off. It's below 40. So we're waiting for momentum to pick up. Momentum's still weak at the moment on skin. All right. Nuformix. Let's NFX. Check that in there. Okay, look at it. Do you know what? I put this line there. This is called RSI divergence. I've talked about this previously in a previous video. Check below. But I talked about someone on Twitter who's a big fan of NFX, which am I. I said, listen, when you get an RSI, this is 70. This is overbought here, 70. Look how high the RSI is. It's at 90 odd. So when you get that kind of level of overbought, that like a boiling pot, like a cooker whistling, like an old cooker whistling, you've got enough steam. It can't sustain that. And look what's interesting here. So with this topped out here at 93, okay, high. Then we got another high, but look, the RSI didn't make it. Momentum was slowing down. This converged, the MACD, so the weakness was coming in, but the share price still attempted another high. This is on weaker momentum, so it was going to do it, double top. It was going to make it. It wasn't going to break a new high, and then all of a sudden, look at that, all the way down the RSI, right down to cooled right off, not too oversold, but down to 33. And here we see that. We'll now need to see this come round and converge to stop going down. That is interesting, where you can see the difference between the price and the strength, and the relative strength, momentum. Momentum is dying, it's getting weaker, and yet the share price is still attempted to go up here. It's not, it hasn't got the momentum, it has to cool off, and that's where you have to look at. Look at relative strength, look at convergence here, and that tells a fuller picture of the share price, what's happening, all right? So it's very interesting there. You can see the momentum compared to the actual share price action. Two different stories going on. This divergence here in RSI compared to the share price is all telling. Okay, what's next? So I've lost my thing here. Open Orphan, not a lot of chart to go in here. Still believe in this in this company. Hopefully the news here again. Not a lot of data there, but it's come back to this low here. With maybe top it up on that bit. Polarean, let's have a look at this. Anything again? It's not a lot of data. Well, not a lot of liquidity here. Topped up. Look at this. Converged. All right. Rolled over. Coming down. Weakness in the share price. Share price coming down again. RSI starts doing it still slightly before the MACD starts diving here. Okay, it's down here, so you can see what's happening there. What's next? Safe stay. I'm expecting to see another TR1 notification from, is it Miton? Yeah, Miton selling out here. This is now valued at what? What's the market cap here? 23. 28 is net asset value. It's 5 million below its net asset value. This is ridiculous for a profitable company now. It's got cash in the bank. They never need to go back to the market. I believe when they release their new, hopefully, Miton will be out of selling by the time these guys release their news on the next hostel. But it'll settle here, I think. Look at that. All these moving averages are converging here. It looks very good. That's a golden crossover. We just need momentum to pick up. Again, this is going to go across the zero. So again, 3 levels to look at. This is when it goes below zero, you can see that. No, goes below zero, pops above zero, RSI goes nuts as well. Share price goes up, goes nuts, comes back down. This converges here, and crossover is obviously down, climbing towards zero. So we'll still see a bit of weakness here. Maybe test this level, maybe, I don't know, test this level again. But I like this as a valuation. A company is, I believe, is undervalued completely. Way education. Way, man. The education. So look at this again. RSI, when it pops above the 50, it starts to move, okay? Green light, let's go. Amber, yes. Red light, getting warm, getting too hot there. Warning, up, tops up. It has another top, look at that. There's another go here, which is quite nice. More strength, but it doesn't make it. And all of a sudden the strength starts to drop off, as does the share price. This starts to converge, just dip below that zero here, but it's picking back up now, look. And the share price is picking back up with it. That's the strength of the share price. Let's look at that. Look at that. The day before, the RSI touches 50. The day before, I said quite like the RSI. It's a bit ahead of the MACD. It jumps above 50, share price next day moves up, and the MACD converges, all right, and it moves up as well, looking bullish. All right. Anything else? Let's try Zeros. I don't think anything happening with Zeros. Let's have a look. Yeah, it's quite flat, but RSI is up. MACD is quite flat. It's not a lot happening there. Yeah, so not that exciting. Okay, it's time to look at my portfolio performance over the last 3 months, 97%, last 6 months, 103%, last 12 months, 138%, last 18 months, 175%. And my portfolio is quite resilient, even though I have a few stocks in it. It's quite resilient because half of my portfolio is now in the iUKD, iUKD fund, which is a dividend-paying fund. And it doesn't move a lot. It just pays out dividends. So it's not very volatile. So that's why it's quite resilient. And the rest is in small cap stocks. These are the small cap stocks they're in. Bidstack 396. Big Dish are sold. Nuformix 161. Agronomics 25%. Integumen 24%. Open Orphan 13%. Down on the portfolios, Immotion. Polarean 2.5. Powerhouse 4.7. SafeStay 6.4. And Zeros 12.8%. That's it. Don't forget, look down below, show more below this video, show more, and you'll see lots of links to other videos if you want to do some research on the dividend funds or anything like that, or any of those stocks there I just mentioned. It'll be below. Don't forget, ask me a question if I think it's relevant for a bigger audience. I'll include it in the video. All right, and if I can cover it, I will. And don't forget, the most important thing of all, if you want the next video straight to your inbox, hit the subscribe button. See my face? And don't forget, after you hit subscribe, hit the notification bell. All right, and on this side here, there's some videos you can watch too. Thanks for watching. Speak soon.